Everyone, Davis Oliver here with the Taxes Save team. Thanks for joining us this week. This is another fun one. The timing on this one's great because here we are still in the first quarter of 2026. And these are clients currently we're helping right now with this week's Taxes Save case study of the week that actually pertains to their 25-year tax burden. So yes, you heard that right, folks. We are helping clients this year in Q1 of 26 save tax for what their burden was in 2025. So that's of interest to you, this would be a great case for you guys to listen in on this week. And again, if this is new to you or want to see things yourself and cut to the chase, we offer a complimentary taxes saved complimentary discovery meeting with you and our team at a time that works for you. So again, everyone's circumstances are different. So if this is of interest, there's many strategies. In fact, folks, we have 95 CPA-approved strategies and more on the way that we'll be having some exciting taxes saved webinars discussing this year. So with that said, we'll go ahead and hop right in. Again, for what we did for this client, this is a successful ER surgeon, married couple out of the state of Virginia that we met right at the end of last year of 2025. And they said, Davis, is it too late? Can we still do something with what remains of the year? And the answer, I said, yes. His name's Doug. I said, yes, Dr. Doug will be able to help you out here, right? And so here's what we did, and we'll get right into it. That said, I'll go ahead and share my screen as we do, and we'll get right into it here. So for those that are seeing my screen, we got our handy dandy taxes saved calculator. And you'll see here at this client, like I said, successful ER surgeon out of Virginia. And he's paid majority some 1099, but also some W-2, but $700,000 in total. This client has of earned W-2 1099 income, right? So active income, right? So for, a lot of people listening out there, if you're W-2, 1099, yes, this client being majority W-2 was able to implement this strategy. So many of these strategies we'll talk about. In fact, we'll even have a webinar this week for those who are listening, and maybe some of us will be able to join us live. We'll talk about all what you can do to go back for 25. So that's what we'll discuss today. So here you'll see this client has $700,000 of income that comes with the state of Virginia, a federal and state tax burden of $214,000. So that's what they're facing, what they've already really paid in since the calendar year of 25 is over and they met us at the end of the year. Well, what do? We implemented a great software strategy where this client was able to put as little as $50,000 down and get a $250,000 deduction. Right? So we took their income from a tax burden of $214,000 to after that $250,000 deduction you're seeing on the screen here in the before and after analysis, we're now down to as little as $114,000 in tax. So as you can see there, folks, about $100,000 was saved in one fell swoop of a strategy. But how's this client going to receive this, right? And is it worth it? Well, let me ask you, folks, would you pay 50 grand to save $100,000 that you thought was forever gone? Most would, right? And so that's the kind of trade-off that we have to weigh for each client's circumstances. And that's what we do here. Again, reach with us at taxsave.com to see how your circumstances make the most sense to impact. So that said, 100,000 was saved, but how did he receive? Well, for this client, though they thought it was too late, that $100,000 was gone, they're going to be getting it back in the form of a refund. Now, refund's nice, but here this client will probably file taxes sometime in April this year. Then the slow IRS, hopefully we can get something back within the next, I don't know, a couple months at best. But let's say it's May, maybe it's June, July at earliest. And this client has now received $100,000 back from what that $214,000 they paid in. So they're waiting a little bit for it, but that's still something that's fantastic, right? If I told you 3, 4, 5, 6 months from now, if you gave me 50 grand today, I give you 100,000 back in 6 months, would you do it? And the answer for most is yes. But where can we play this impact that's even greater for those that are listening and maybe say, hey, Davis, I'm actually not as rushed for 25 tax savings because I know we need to get that time in the corner. In fact, this year, Davis, the year of 2026, I'd like to get ahead. As we have many of our current clients that taxes save coming to us saying, I'd like to get ahead so I can keep more of my paychecks, my withholdings throughout this year, right? Rather than waiting for a refund, though we can, and it makes sense mathematically, time value of money and what we can get today is going to be more impactful. For those listening, if we can help you starting today and getting an impact of your 2026 tax planning going, we can even play a quicker time value of keeping more of your paychecks and tax bill that typically would go away in tax to keep in your bottom line cash flows. So let's look at that, right? So if this client came with us this year, did the same strategy, right? We would have him equivocally for the next couple quarters pay, not take, keep out 50 grand per quarter of withholding back of his paychecks. 50 grand. Think about that. If you could keep 50 grand or 100 grand this year versus waiting for 100 grand going into next year, think about what 100 grand you could grow it into. So that's what we mean by the time value of money of return of tax. So everyone's circumstances are different. And for those that are just learning about that today and want to see how it affects you and your taxes alone, please reach us at taxtosave.com. We look forward to seeing you there and getting to see how we can potentially help you with your circumstances and where you can keep more, live more, and leave more of what you've worked so hard for, folks. We'll see you there.